Snap flash fam, Standard Chartered Bank. Botswana just dropped its 2024 results, and it's looking like a major win. We're talking 1 billion in operating income, 478 million in pre-tax profits, up 19% from last year, a 27% return on equity, and cost reductions by 8%. And now, they're pivoting to a bold new strategy for 2025. Let's break it down. What's next for Standard Chartered? Why are they shifting focus? And what does this mean for you? Stay tuned. Before we get into the details, hit that like button and subscribe for the hottest finance updates, business moves, and money tips. The bank's CEO made it clear, this isn't just about profits, it's about long-term sustainable growth. The big shift? They're moving full force into corporate and investment banking. That means more focus on major businesses and multinational clients, investment banking services like capital structuring, debt markets, and financial advisory. Plus, stronger government and institutional partnerships. Why? Because corporate clients drive bigger transactions, and Standard Chartered wants to be the go-to bank for cross-border deals.
We have performed very well as a bank, and there is a reason to it. We chose a strategy, and that strategy is paying off. This is the one thing about what we do at this bank is we're very clear what it is that we want to do, how we want to do it, and when we want to do it. So strategy, focus at play is what we are going to be showing you now. We're not showing the slides anymore? Or should I be doing it myself? Oh, there you go. Can continue to do it. Right. That's the strategy, guys, that we chose to embark on. We have always been very clear that we play our own game, and we still say so. We play our own game, we're running our own race, and that race is based on returns. Right? If you look at our returns, we're sitting at 27%. And when we looked at our archives, the last time that we were able to get to anything decent was 2014. From then on, from 2015 up to now, it's been a great trajectory of what it is that you're seeing there. And we want to believe that we have done very well. This is a great franchise for anybody to be wanting to invest in, and we will demonstrate to you what the investors are saying in relation to that. So it's absolutely no small feat, right, to do what we have done since whatever time that we had a loss. I think it was 2017, 16, somewhere there, up to now, and we're posting 27%. I understand that the average of the industry is about 22%, and that's where we're sitting now. The operating profit that we have shown to you is at 478, a good jump out of the 403 that we had posted in 2023. This is what our stakeholders want to see, and this is what a focused business means. We're focused on that which we want to do. We're focused on the areas that we have chosen to play in, and we are making it work for all the stakeholders that have sent us to do what we're doing. Look at the cost-to-income ratio. This is the efficiency that we speak about. We have managed to reduce this cost-to-income ratio. I know the difficult conversations I've had with yourselves a long time ago when we were sitting at over 90% in relation to the cost-to-income ratio, and we have steadily worked on this very, very clearly, demonstrating that the choice that we made to go digital is definitely working, and these are the results of it. Income has grown up, very, very slightly, but it is quite resilient. Basically demonstrating to you that the areas that we have chosen to play in and the way that we have chosen to play is actually paying off. That's why the income is at the levels that you guys are seeing. So these are the great results that we're giving to you today. And let's take a backdrop of where these results are, what these results are based on. Remember, we are posting these results coming out of a contraction of 3.1% that we all know about, right? We're coming out of a situation where diamonds, which have been driving this economy, have become quite problematic. And that's another story that you all know about. I'm not going to take you through all of those things. The reasons for it, you are also quite clear about. why the diamonds are doing what they have been doing. And it doesn't look like the trajectory will begin going up as steeply as all of us would have expected. We had thought that we would begin seeing some green shoots in Q2 25, and then we should be able to begin to see some kind of steady rise in pricing H2 2025. We don't know if that will be the case, but we are watching this space as all those that need to do something about it are continuing to do that. The other problem that we found ourselves in is market liquidity. This issue with market liquidity, where we're sitting at buying funding for anything between 13 to 15%, right, is major. Right? And you would remember that when things begin to happen like that, there was a time that banks were buying money for between 3 and 4%, right, which is what we consider to be normal. And if you are now buying money for between 10 and 15%, what does it mean for the person that you are going to be lending that money to? And this problem is continuing. We do know about what's happening with government coffers and the issues that are there. And we are not necessarily going to delve too much into that because, yet again, it's a story that you all know very well in terms of what's happening with the government coffers. And that situation has some kind of play towards the market liquidity situation that we currently are seeing. And even last year, it's not because it was not hitting up to the usual 7 to 8% in terms of cost of funding. It definitely continued to do that, but that's not, that wasn't our experience, mainly because, as the CFO will tell you later on, they made decisions to say that this is where we're going to play, this is what we're going to do, because we don't believe that this is proper play. Because the only way for you to continue hitting money up to between 8 to 9% is then to pass it on to consumers, and that's not how we'd like to play. The MOPR stayed at 1.9%, absolutely no concerns there. We think it's still a good thing. Inflation 2.7%, slightly elevated for the 6-month period that we currently are in. And this just demonstrates to you what we're talking about in terms of the economics that we found ourselves in and what is going to happen. In terms of where this is going to end in relation to the GDP of the country, it's anybody's guess. It depends on which economist you speak to. Is it going to be 3% in terms of growth after the 3.1% contraction? Is it going to be slightly above the 3%? It's anybody's guess that you may speak to. But it was not easy conditions that we came out of for us to be able to present the results that we have just given to you today. And in terms of where we're going, I will speak to the high-level numbers as usual and demonstrate to you what it is that we're doing. But most importantly, we want you to get to understand the crux of the pivot that we are making as a business. What is this animal that we call corporate investment banking, and why is it so important for us to want to focus on it only when everybody else is doing it combined with something else? What are we seeing? Somebody may ask, and that's what we're going to talk to you about. We're posting record growth in terms of shareholder returns this year. Yet again, another first in a very long time. The last time that we can, as we try to go back into our archives to find out, there isn't a period in the last 18 years when we have delivered dividend per share of 105.52 as we're going to be doing this year. This is a record to us over the last 18 years that we have tried to look at, and we think it's going to be great for all the stakeholders that are involved. The share price is sitting at 701. You can see where it was coming from and what exactly happened for the share price to get to where it is. We are expecting that the investors should be happy to see the record dividends that we are proposing for 2024, and we're expecting that everyone is going to be happy. And this is the efficiency that we're talking about. One has to think always, if I put $1 in this particular business, if I put a pula in this particular business, what am I going to get out, right? If I do that. And this is what you get out when you do that with Chartered Bank.
While they're shifting focus, they're not leaving retail customers behind. Their wealth and retail banking division is booming. $791 million in income, up 11%. wealth assets tripled in 2024. International banking hubs in Jersey, UAE, Singapore, and Hong Kong, giving clients global banking access. Translation: if you're in Botswana and looking for high-end banking solutions, Standard Chartered is stepping up its game. What's coming in 2025? More investment banking services, think debt financing, risk management, and corporate finance. Expanded cross-border banking solutions, and deeper ties with Botswana's economic recovery initiatives. Asu Kwoeng Posong, head of corporate commercial and institutional banking at Standard Chartered Bank, narrows it down.
To continue to grow. What you have known all this time, or what you will know as a typical corporate and commercial bank, is what you have here. So you have transaction banking where you walk into the bank, you do your business. Even as a corporate, this is the part that pays salaries and does all that. That's transaction banking. You have financial markets, and financial markets is very interesting because all of us here are using something that is imported. Cameras, this mic, everything, and this is what pays for it, right? The flow of money from when you are actually buying $1 to when it gets to the supplier. Our security services, all our pension funds are seated here. This is what we've been offering. And then our corporate finance, the lending and loan products, is actually what you have on this side. This is what we are adding to the business. And that's just part of it. We'll continue to add all that to the business. So let's start, first of all, with financial institutions. You remember that we talked about being a bank to other bankers. Now, when you are making an international payment, when you're making any payment outside Botswana, it has to go through an international bank. Any payment that you're making outside Botswana has to go to an international bank. Standard Chartered is the only international bank you have here. It's not talking about size, it's not talking about color or anything. It's just you need to have a US clearing license. And that means that today, I think we're covering about 70% of the market, which is a specific focus that we have been doing. And all those flows have to go through us for you to be able to make a payment for anything that you're buying outside Botswana. I remember that 2 years ago, we introduced the RMB, the Chinese RMB. So what that means is that for those payments that are going to China also, we are actually facilitating those flows directly. So that's really a key differentiator that we have. There's no other bank in Botswana that can do that today. You need to have a US license, and trust me, it takes a lot. It's almost impossible to get a new international bank coming into the market. And that's a key focus and strategic area. And we're saying, if you have this kind of product, if you have this kind of service where you are unique, then why not focus on it and make sure that you support the other banks instead of leaving what you have, which is unique, which we've had all these years, and then we're now competing. So that's why we're saying we're pivoting towards where we have areas of comparative advantage. And we have my colleague there, Patricia. She's the one that is leading that portfolio. You can stand up so that everybody can see the wonderful job that you're doing. So that's my colleague, Patricia. She manages our financial institution business. So we also have metals and mining, and today I'm proud to say that we are the largest bank within the mining sector. I know that a lot of people have said, oh, I thought you were leaving mining, you guys have left mining, etc. No. There are different categories within the mining sector. There's the midstream, we don't play in the midstream, we're clear about that. There's the downstream, we do play with clients in that sector, but you find out that most of them are diversified and they're across the globe. But in the upstream, where you need the big money, that's where we are. And that's where we play. And we're the largest bank with the largest facilities to mining companies in Botswana today. And that is not talking about what we're doing, we're talking about pure balance sheets, pure loan size, okay? And we're even going to do more. I think in the next 1 or 2 months, we'll have another maybe like more than 2 billion pooler going in there, and we'll continue to do that. That's just the beginning. But it's not just about that. You all know that there've been, there's a need for large-scale investments into mining. And we know what the challenges in the diamond sector are today. So you really need a bank that can look forward across all the challenges today. And that's why I'm proud to say that in the next couple of months, we'll be putting in more money into the diamond mining sector. So while the market is actually depressed, while the market is going through a challenge, we are looking out forward and saying, how do we support these companies to be able to build into the future? So that's exactly what we're doing. And we're going to continue doing more of that. We've done a lot of work with these companies so that we can help them to bring research. We can take them to international markets. I think that's one important part. And I'll come to transport and logistics. So for transport and logistics, you would have all seen government's plan to really go back and look at the railway, and it's a very important strategic lever for the country. If we're going to achieve this thing called diversification, there's no way we can do that effectively without actually those type of huge investments. It's not going to cost anything less than $4 billion. We know the current challenges today, so where is that solution going to come from? And that's why it's very important that we have that capability, that unique capability to attract that kind of money to Botswana. So we don't have time to start looking left and right. We need to focus, and that's why we're pivoting our strategy towards corporate and investment banking. Because we need to start looking for that money, we need to start bringing that money into Botswana, and we need to start doing the type of work that is required. But it's very difficult, right, for you to go and ask someone for $4 billion to bring into Botswana, which is why we have a strategic advisory. What we do in our strategic advisory is that we sit down with you as a corporate, we look at your plans, we look at the risk, we look at government, what can government support. Sometimes when you take a loan, it reduces your credit rating, so we also have to look at that type of impact, and then we now bring in strategic advisory. And there's so many other things we're doing. Oil and gas, we all know the transition from governments to look at Botswana oil within that space, so we have to support them. Power, we're going through that now. I see we knew. I think we had started building up our capability before we knew that there was going to be significant challenges. So we're ready, and since last year, we've actually been looking at a lot of various projects in Botswana which are going to come on stream. And you would ask me whether we've seen these things work before. Botswana is not the first market that we're doing corporate and investment banking only. And I'm proud to say that the other markets that we've done that in Africa, we have grown the business within 2 years by 100%. So we do know what we are doing. Okay? Here you will see we have sustainable finance. We're going to be doing more commodity trading as we see the copper business start to grow, and we hope that that continues. But there are a lot of other things that we could be doing. Some of you might know that the gold prices have actually gone up by more than 100% after COVID. Why, as an economy, don't we invest in that? Or maybe there's some strategic investors that want to use that as a security. But one interesting thing that we're doing now is that we're now doing gold loans. So it's a very interesting thing that we're doing in some other markets in Africa, where we're not lending money, we're lending gold, right, for you to be able to buy back on maturity. So there are a lot of various things that have been done and are being done not in Western markets but in Africa.
What does this mean for you? If you're a business owner, expect more funding and financial solutions for expansion. If you're an investor, international banking just got easier. If you're banking with SCB, look out for new investment and wealth management options. Question for you, do you think Standard Chartered's new strategy will pay off? Drop a comment below. For more business wins, finance insights, and money moves, hit subscribe and turn on notifications. This is Snapflash, bringing you the biggest financial stories in a flash. Until then, keep questioning and stay informed.